Welcome to Polaris Live. This is Sarwar Kashmeri welcoming our viewers from around the world to this series of programs on the United States and China in the world. The program is brought to you in conjunction with the Foreign Policy Association of New York. With today's program, PolarisLive.com begins its third season, our third year in operation. Our focus remains to try and explain the relationship between the United States and China and its impact on the world through the eyes of global experts. There is a new global force, however, that now intrudes into the business of the two superpowers, the Global South, as it has been termed. A large group of developing nations that comprises over 75% of the population of the world and over half of its economic output. It refuses completely to fuse with either one of the two superpowers. This new geopolitical development will have a significant impact on the direction of the US-China relationship, and we intend to increasingly include it in our programming. But we start our third year by focusing today on the slowdown of China's powerhouse economy, an economy that has raised over 800 million people in China out of abject poverty and is underwriting the largest infrastructure project in the world, China's Belt and Road Initiative. The slowdown of China's economy has been a headline issue around the world for much of this year, and speculations abound about the permanent slowdown of China's well-being, which, if it is true, will affect the health of every country in the world. To help jumpstart this important discussion today, PolarisLive.com has invited one of Asia's most influential investment bankers, Hong Kong-based Shan Weijian. Shan Weijian is an economist, businessman, and author based in Hong Kong. He is the executive chairman of PAG, a leading alternative investment firm focused on the Asia-Pacific region with more than 50 billion US dollars under management. Over more than 20 years in investing, he has led a number of landmark transactions across Asia, including over more than 20 years in investing, he's led a number of landmark transactions across Asia. He's the best-selling author of 3 books, including his latest book, Time Machine. A trailblazing American venture in China offers a fascinating inside story of the first and astonishingly successful foreign acquisition and control of a Chinese national bank, a feat that has not been repeated ever since. He's also he currently serves as a trustee of the British Museum and as an independent director of the Alibaba Group. So, Mr. Shan Weijian, welcome back to Polaris Live, and thank you for joining us from what I know is a very late hour in Hong Kong.
Thank you very much, Sarwar, for that very kind introduction. It's a great pleasure to be back on your show.
Well, thank you so much.
I would like to make one small correction of what you have said. The book that I wrote is titled Money Machine, not Time Machine, as you mentioned.
Gosh, I must have been thinking of Jules Verne. My sincere apologies.
No problem.
The book, your third book is
Jules Verne, myself.
Well, my profuse apologies. And the book, of course, is Money Machine, which is obviously a much more descriptive title. And I have read it, and Shan, it's a wonderful book. No one, I'm sure, would have believed that a largely foreign entity would be able to do what you did in a Chinese bank. And so you constantly surprise America, you constantly surprise China, and I'm sure you constantly surprise the many investors who continue to support you.
It's very kind of you. Thank you.
So, Shan, just about every cover of just about every political or business journal these days now boldly announces that China's spectacular growth has run its course. Now comes the quicksand. A recession is underway. You say.
Well, I think there's no question that China's economic recovery from, of course, the COVID lockdowns from last year has somewhat stalled. The recovery in the first quarter was not very strong, but it became even weaker in the second quarter. There were three engines in China's economic growth: investments, exports, and consumption. On all three fronts, I think the growth has become very low, in low single-digit number, which has not happened except during the COVID years in China before. And therefore, the market confidence has sapped, and there is worry that the Chinese economy will continue to slow down.
But how about these projections, Shan, that we are about to head into a recession? That because of the very tight control of the Chinese economy, that people are saying it's not going to unleash the forces that will get itself out, that the growth, the spectacular growth, is not going to be there going forward. I mean, China's been growing for what, 4 decades at this point. And isn't it normal to see a small slowdown, irrespective of whether there was COVID or not COVID? How do you answer these headlines about recession is looming, for example?
By China's standard, this slowdown is not normal. In the past 45 years, China has achieved nonstop growth. And China started to grow quite spectacularly since about 1978, and that was 45 years ago, when Deng Xiaoping, Chinese leader at that time, embarked upon a path of market-oriented reforms, and that is, China started to embrace a market economy and an open door policy to integrate the Chinese economy with the rest of the world. And it has achieved great success, as we know. Just in the past 20 years or so, the Chinese economy grew by 15 times. So for 45 years, there has been no recession. Now, every market economy goes into economic cycles. And in every market economy, a recession seems inevitable. But for some reason, the Chinese economy has not experienced a recession in 45 years. I think the reason that China has been able to do so is the ability to squeeze bubbles out of the system before they burst or before they cause recession. This time around, however, the slowdown is much more severe than China has ever experienced in the past 45 years. So it's a good question whether or not China will head into a recession. And my thinking is the prospect doesn't look very good. It's certainly not rosy. The challenges are great. I'm not bullish about the Chinese economy in the foreseeable future, but neither am I very bearish about it. I don't think that the Chinese economy is going to do much better than the 5% economic growth target the government set for itself. Nor do I think that the economy is going to perform much worse than the 5% target. So I think more or less, they will be able to achieve that particular target.
Well, That's so interesting what you've said, because even with the lower numbers, the target that you've mentioned, the economy is still a pretty powerful force in as compared to other Asian economies. Is this not? I mean, that kind of a performance out of the other big trading countries in Asia would be considered pretty good. It's just that we are comparing it to the astronomical growth of the last few years. So, would you say that China will be very favorably comparable in growth to, let's say, Japan, Australia, and other Asian economies, India also?
This year, not necessarily. I think that everybody can feel the difficulties in the Chinese market. Exports are down. Investment is more or less flat, especially private investment has remained flat. And private consumption has been flat as well. So you feel that China is not performing to its potential. And I think much of the problems that China is facing right now are policy induced. For example, last year, we know that China pursued a zero COVID policy. There were severe lockdowns in big cities like Shanghai, which caused very significant economic damage. And China is still recovering from that. For example, international flights probably have resumed to about 20% to 30% of the pre-COVID 2019 level. So the confidence in the market and among businessmen is particularly low. The reason I don't think that China is going to do much worse than the target it has set for itself is because when the economy or economic growth really slows down to a level below the target, then the government will have to do something to save the economy. Then the big question is whether or not they have the means, they have the tools to save the economy if they want to. If you look around the world, in many countries, governments would like to save or help their economies, but very often they don't have the means to do so. Just look at Europe, right? Europe, whether you're talking about the UK or Germany, is largely in trouble with high inflation rate, low economic growth rate, or no economic growth at all. Interest rates are going up. So even if Europe, many of the European countries want to help itself or themselves to grow the economy, they have very limited means to do so, almost no means to do so. Given where the inflation rate is, you can't cut interest rates. You can't expand monetary supply. So you basically get stuck. But that's not the case in China.
Okay, well, that leads me to this. The other headline issue is, and it's taken off in the last 2 days with some pronouncements by well-known people, that there is now a chance that China will never become the largest economy in the world. And so I ask you, people are using the word never. Should they? That's one part of the question. The other part of the question is, given China's population compared to that of, let's say, America, isn't it inevitable that even with the slower growth, the Chinese economy will continue to grow and the laws of economic momentum will at some point let it equal or exceed America? And then the third part of it is, So what? Is it really that important that, China has that brand of the largest economy in the world? And what do you think about that? I realize this is not an economics interview. I'm just interested in the optics of it.
I will not address the question whether or not being the largest, not being the largest is the important issue. But I would think that if China stops growing, it has severe economic and political implications for itself. I think that the legitimacy of the Chinese leadership comes from economic performance. And that has been the case in the past 40 years, past 45 years. If China stops growing, there are just too many problems domestically that they will not be able to solve. Growth solves many problems. So just now, I mentioned that if the Chinese government wants to save its economy, it has the means to do so. Let me talk about the means that they have at their disposal. See, on the monetary side, as I mentioned, in all the other major economies, there's not a possibility to expand monetary supply because inflation rate is too high. And therefore, you have to tighten money supply by increasing interest rates in order to bring down inflation. But that's not the case in China. China, there's some worry about deflation. I don't think China is going to get into deflation. But if you look at the price level, CPI, Consumer Price Index, last month was 0.3%. And producer price index is negative, about 3%. So there's no inflation to worry about. Interest rates, the benchmark interest rates, remains at about 3.5% to 4%. Prime lending rate is 4.5%. Reserve ratio that the banks keep with central bank remains about 15%. And therefore, if China wants to expand its monetary policy, it has ample room to do so, more so than any other country, almost any other country in the world. So that's on the monetary side. On the physical side, I would argue that the Chinese government is also in a better position than almost all the major economies in the world. Much focus is put on China's debt level, that is societal debt as a percentage of GDP. If you look at the Chinese government debt, I would argue that it is among the lowest among the major economies in the world. Central government debt represents about 21% of GDP, of which only $20 billion are in foreign debt, and the remainder are local currency debt. Local government debt is more of a problem, representing about 80 to 90% of GDP by my estimate. Officially, it's about 50 to 60% GDP, but I think if you include off-balance sheet items, it's likely to be 80 to 90% GDP. So combined is about 110% GDP. That is government debt to GDP level, compared with 250% for the Japanese government, just at the central government level, compared with 140% for the United States, just at the federal level. So the Chinese government, by comparison, is actually lowly geared, not much indebted. But that's only half of the story. That's only one side of the balance sheet. Unlike large economies like the United States and Japan, where there's not much assets on the left-hand side of the balance sheet. If you think about the US government, it owns Amtrak, post office, both which lose money, and there's not much assets controlled by the government. But for China, state-owned assets in net asset value terms represent about 70% of GDP. In market value terms, is more than 100% of GDP. So if you apply the concept of net debt for the Chinese government, it's probably zero or negative. And therefore, there's ample room for fiscal expansion if they wish to do so. And that is why I think that when the economy is really getting into difficulties, the Chinese government will be compelled to save its economy, and then they have ample means to do so. And that's why I don't think that the Chinese growth is going to stop. It has potential to perform much better than the 5% target. But because of policy issues, it has not realized its potential. But nor do I think it's going to perform much worse than the target they have set for themselves. It's too early to say that the Chinese economic growth is going to permanently stop. I just don't see any signs of it.
I'm just reminded from what you said, Shan, about the famous American writer Mark Twain's famous, well-known saying, right, that the reports about my death are vastly exaggerated. Listen, I want to again remind our viewers that Polaris Live is entirely reader-supported. You can help us by subscribing to our YouTube channel and by subscribing to the Polaris Live newsletter through the website, which is kashmeri.com, KASHMERI.com. And back now to my guest from Hong Kong, Mr. Shan Weijian. So, Shan, some time back, you told me Americans simply don't understand how capitalist China is. Is that still true, given all the reports we hear about state interference with the business in China?
I think China today is not as capitalistic as it was about 10 years ago. Somewhat unfortunately, but it remains predominantly a market economy. I think that's the major force, major driver of China's economic growth. The private sector represents about 2/3 of the Chinese economy. See, I think that China has made great progress in improving its productive efficiency in the past 40 years. 45 years ago, it was a centrally planned economy, a Soviet model economic system, which was terribly inefficient, both on the productive side and on the allocative side. And I think the Chinese economy has improved on the productive side. On the allocative side, of course, the market economy is much more efficient than the centrally planned economy. And therefore, in order to improve allocative efficiency, China should go further on market-oriented reforms. And it doesn't seem that China in the past few years has made much progress in this regard. And it can be argued in some areas it has regressed, and that is going back to more state-controlled businesses than moving full speed in the direction of private sector.
I want to tangent a bit, if I may, Shan, to talking about the continuing U.S. sanctions on businesses in China, on imports, exports. I wonder, how do businesses in Asia react to this continuing continuing number of sanctions by the U.S. U.S. has always been looked at as a leader of the capitalist world. Here we are with all these sanctions. Are they really hurting China as much as the public perception is? There are reports coming out now that other Asian economies to which some of the production has been outsourced are actually becoming much more dependent on China, and therefore the joint economies are not very much different as far as the US is concerned than they were before. So how are Asian businesses reacting to the continuing sanctions? And two, is China getting hurt as much as the public perception is?
I think there's no question that the United States is making an effort to contain China, to put down its economic growth through sanctions and other means, such as trade war, which started, as we all remember, in 2018. It remains in force, even though it helps increase price levels in the United States in a high inflation environment. And America has not decided to let off on the trade war. How much impact has sanction or have sanctions had on the Chinese economy? I think to some extent, of course, there is an effect, especially in the technology sector. The world is very much integrated, and if there's effort to either decouple, or nowadays the term is changed to de-risk, of course, it's going to affect China's effort on the technology front. But I think that the impact on economic growth is rather minimal. You see, if you think about the former Soviet Union, it used to have some pretty good technologies, especially in space and in weaponry. Their weapon systems were probably as good as America's in those years. But the problem with the Soviet Union was it was not able to feed its people, to provide a reasonable livelihood to its people. So what is more important to the economy, to a people, is the living standard. And that means to feed the people, to clothe the people, to shelter the people, to build an infrastructure, which is very important for economic growth. And if you look at China, very often we think that China should move more in the direction of the market, but there is a place for the government to play a role, that is infrastructure. And China has built the best infrastructure in the world today. It has the longest high-speed rail system in the world, representing about 2/3 of the world's total, about 40,000 kilometers or 25,000 miles. It has built the best ports, best bridges, best highways, best airports, and all that. So the infrastructure in China is first rate in the world. And I think that matters more for economic growth than curtailing some technology sectors through sanctions by the United States and its allies. And I might add in this particular regard, ultimately, what really sustains a country's economic growth is productivity increase, not more input of resources. And in this regard, America leads the world with about $600 billion on R&D just last year alone. But China is not far behind. China's economy is about 2/3 that of the United States. But last year it spent about $560 billion, just a shade lower than the United States on R&D. So in percentage terms, China actually is spending more on R&D than the United States, about 3% or more than 3% of GDP. And therefore, China will continue to grow by increasing its productivity, and China will continue to grow on the basis of a well-built infrastructure. If you compare the Chinese infrastructure and American infrastructure, you must say that American infrastructure is really a big problem for the country because it's crumbling, whereas China has the longest high-speed rail system in the world. America doesn't even have a mile of high-speed rail system. So in this regard, I think that China is actually pretty well positioned for economic growth.
Well, Shan, I will reserve the right to not applaud your last statement on the grounds that it may tend to incriminate me, as the Americans say, and I couldn't agree with you more about the infrastructure, however. But I want to tell you, we've run out of time, unfortunately, but Ambassador Max Baucus, who you may know, who was the ambassador to China from the United States, said last week that he was absolutely delighted at the amount of trade and commerce that is still being done between China and the United States. And he hoped that that would continue to grow. And he said, just think about the geopolitical situation that the two countries find themselves in. They are barely talking, they're at daggers drawn. The only people that are talking are the business people on each side. And so he said that that is what we need to keep doing so that we continue talking, because that's what the two superpowers need to do. And with that, Shan, I want to thank you again for appearing on PolarisLive.com to open our third year in operation. And to the rest of our viewers, that's all the time we have. Join us again next week when we have another expert on this relationship and economies on PolarisLive.com.